Investing into monthly paying dividend stocks can be one of the best choices investors can make if they are seeking cash flow, meaning monthly paying income directly into their portfolio. This can also be a useful source of passive income, particularly for those that don't want to work anymore, or retirees, or those that just want to have some extra income cover some of their bills. But it's important to note that not all companies do pay dividends monthly. Obviously, there are certain industries and sectors that typically do pay monthly, such as REITs, utility companies, mortgage-backed securities, and certain ETFs. But in this video, we're going to talk about why, in my opinion, I think Realty Income is the best monthly paying dividend stock, and we're going to go over exactly why. So if you are already a dividend investor, you already know a decent amount about Realty Income most likely. And comment down below out of curiosity if you currently hold any Realty Income shares in your portfolio. But Realty Income is a well-known real estate investment trust that's been operating since the 1960s. The company is best known for its monthly paying dividend payments, and on top of that, they've been raising their dividend consistently for a very long time now. Some of the things that are great about Realty Income is, for one, it does pay a monthly dividend, which means that every single month, every single 30 days or so, you are going to be receiving your dividend deposited into your portfolio. Now, most companies out there in the stock market do pay a quarterly dividend, which of course isn't that much different than a monthly paying stock, but having that consistent monthly income coming in, especially for those that are trying to use this income to cover bills or possibly retire, can be very, very helpful. Another reason why Realty Income is a great stock in my opinion is because of the dividend growth. Realty Income has a very long history of dividend growth and increased their dividend payments for more than 50 consecutive years. Now think about that for a second. Getting paid a dividend every single month, and on top of that, having that dividend pay you more year after year after year. As far as Realty Income goes, it is a REIT. It's a real estate investment trust, and they have quite a diverse portfolio. The portfolio includes things like retail, industrial, office, and other types of real estate. The diversification helps to reduce the risk of any single property or sector affecting the company's overall performance. And the fact that Realty Income is so diversified was very vital, especially in times like we saw in 2020 during the lockdowns. Certain properties within Realty Income's portfolio were affected more, and certain ones were affected less. But the reality is that the fact that they were diversified enough made the investment stay pretty strong. Realty Income also has a very strong financial performance. It has a strong track record of tenants paying their rent on time and increasing rents over time. On top of that, Realty Income has recently made some major acquisitions, which just makes the portfolio even stronger. But one thing I love to still do is to look at Realty Income versus the S&P 500. So right here on Seeking Alpha, we can chart out the S&P 500 right here in the blue versus Realty Income in the orange and see how they both have performed over time. So as far as price return goes, remember this is just the price return, not the dividends included. If you look at the 1-year chart, Realty Income is down 0.58% and the S&P 500 is down 9.18%. So Realty Income is winning as far as price return on the 1 year. On the 3-year, Realty Income is down 13.8% on the price return, and S&P 500 is up 22.03%. On the 5-year, it's pretty even. Realty Income at 40.91% in the green over the last 5 years. S&P 500 up 53.61%. But what's shocking now is if we go to total return, this is with dividends being paid out. And the 5-year Realty Income actually beats the S&P 500. 75.07% from Realty Income, and the S&P 500 returned 67.75% over the past 5 years. One thing to keep in mind though when you are investing into REITs is the taxation. The tax treatment of REITs can be something that turns some investors off. So in order to qualify as a REIT, the trust must distribute at least 90% of its taxable income to its shareholders. In turn, REITs typically don't pay any corporate income taxes because of their earnings and the fact that they're passed along as dividend payments. And while steady cash flow of payments may sound enticing, REITs dividends come with unique tax consequences for investors, which you definitely want to make sure you understand. These payments can constitute ordinary income, capital gains, and or return of capital, which receives different tax treatment compared to qualified dividends. So truthfully, all in all, Realty Income is still my favorite monthly paying dividend stock, and that's why I currently own between 500 and 600 shares of it in my portfolio. If there's investors out there that are looking for a steady stream of income, long-term growth, and they want to see their dividends grow over time, this could definitely be a good monthly paying dividend stock for them.